If you are new to trading futures, you're a beginner that's setting off on your path to basically educate yourself on the correct way going about trading futures, you really want to watch this video from beginning to end because I'm going to share with you my top 3 strategies that have allowed me to become profitable over my 14 years of experience in trading the future markets. Now, you can do this either pre-market trading or during the New York session. It's up to you. Some people actually even trade during the evening time. Now, again, this is a video that's going to supply you with 3 strategies that are going to help you become consistently profitable if you are struggling in this business. Okay, so first and foremost, I have, if you see on my chart here, strategy 1, 2, and 3. One of these is pretty much my bread and butter, the cornerstone to actually how I trade. It's all surrounding multi-chart confluence, but a lot of you know that there are also other strategies in which you can trade. I'm not saying there's anything wrong with trading just one specific strategy, but sometimes you have to kind of pull something extra out of the box, okay, out your arsenal to be able to trade during times when the market may not be pulling back to key areas, let's say supply and demand zones. All right, so let's go over 2 and 3 to start with. All right, because 1 is really my bread and butter trading strategy that I like to cover. It all surrounds pulling back to a key area of supply or demand. In this case here, this would be a demand zone. But you have to understand one of the major concepts in trading, if not the most important, which is market structure. You've got to get the overall direction of the market correct, whether it's making higher highs and higher lows, meaning breaking and trending to the upside, or are we making lows, lower highs, and lower lows to the downside, in which we will be looking for key pullbacks to areas of supply. All right, so the market can only move in 3 directions: up, down, and sideways, and I don't recommend anyone trading within ranging markets. Okay, so let's start with number 2. All right, so today, say for example, well, really leading up to yesterday, the market was in bullish mode, and then into yesterday's trading session, we had a lot of selling off to the downside. So the market was making lows. It broke structure here, broke below this low, and broke more structure to the downside and made this low right here. All right, so we were bearish. The opportunities in which you should have been taking your trades yesterday should have been pullbacks or retracements to key zones of supply. All right, so this is a higher time frame chart right here, my 120. This is what I'm always looking at most times, or I glance over at it to determine which way that I need to be trading. I like to form a bias around my higher time frame chart. Now, this is what I marked off here, a supply zone. What is supply? Aggressive area of selling to the downside, as you can see right here, where the market broke below an area of structure. Okay, so we broke below this area, came down at a low, a lower high, and broke more structure to the downside. So it left this beautiful area of supply resting right there. Now, the way I like to trade as well is, I'm going to say this, outside of my bread and butter type strategy, if the market is not pulling back to a lower time frame zone, number 2 setup here or strategy is going to be, it's all surrounding supply and demand, okay, except for this one right here, which I'm going to go into detail about that, which is a liquidity sweep, okay, setup. Supply and demand, basically you can trade it in 2 different ways. All right, either using a multi-chart confluence setup to where you have a zone within a zone, which I'm going to show you here within the strategy number 1 or setup number 1. And then this one here, which is setup number 2, is where, let's say we don't have a smaller zone resting on the inside of our higher base zone, which is this right here. The lower base zone is going to be on a lower base chart. All right, so I'm going to show you that with example number 1 or setup number 1. Number 2 is where a situation where the market pulls back to a key level, a key zone, like here, this area of supply, and we don't have a smaller time frame zone resting on the inside of it. So what I'll do is we have bearish mode to the downside, or a trend where it's making a channel coming lower, and then we have a nice higher time frame supply zone. Okay, so I'll mark up that zone. Now, all I'll do is wait for the market to retrace back to this actual zone here, which is a supply area. If I go down to my lower time frame chart, we'll go right here. Let's go to the far right. you'll see in this case right here where the market comes back up and it taps into the supply zone. This larger rectangle box, which is blue, is the supply zone from the higher time frame chart. Okay, the market taps into it. What I'm looking for is either a breaker structure lower on the lower time frame or just a simple demand zone to be created once the market taps into the higher time frame zone. So it taps into it right here. Now at this point, I'm looking for either a breaker structure lower or a demand zone to be created. This is a demand zone. I'm sorry, not demand zone, guys. If I said demand, I'm sorry. Supply, not demand, supply. This is a supply zone resting right here to the downside. Okay, so if you see here, this was supply, aggressive selling, retraces back to the zone on the higher time frame. As it's retracing back to the higher time frame zone, we then either want to see a breaker structure lower to give us a nice area of clean or new area of supply, or a simple supply zone without a breaker structure. So you can either have a breaker structure with the area supply created, or just a simple supply area. Okay, zone. The market creates an area of supply right here. I would mark up this zone, originally, and wait for it to come back to this zone right here, right? So this zone is a newly created supply zone after the market rejected the higher time frame zone. When it pulls back to it, as you can see, it breaks right through it. Okay, so if you get a break through that zone, then it's no longer valid. It's only valid if it taps the actual zone and reacts or rejects and then pushes lower from it. So in this case here, I can eliminate that zone. Now, the market continues pushing up. We're still inside, okay, or we're still tapping back at the higher time frame supply zone. All right. In this case here, as you can see, we created another demand zone coming lower. So the market makes a run to the downside, small little pullback, and then aggressive selling. This is a nice pullback to a key area of supply right here. Okay, so it taps the higher time frame, taps the lower time frame. We got a supply zone. There's no breaker structure, but there is an area of supply resting right here. Now, once it taps the zone, I'm going short. Okay, taps into it, go short right here. Either aggressive here, you can get in at 8:30. Or wait for the break and close of the next candle right here at 8:23. Take it to the downside. Okay, so we'll start aiming for at that point there, maybe some areas where there's gaps to be filled back to the downside. Now, we don't want to be going long because we have a massive area of supply resting right here, or supply zone that's telling us, hey, we have not broke through this area of structure yet. So why would we be looking to go long? Only shorts, right? So I would be aiming for lower areas for the market to actually run. Okay, so you can look for the market to push lower, and if you got into this trade, say right here at 22,830, then aim for gaps to be filled coming back like right here and right here. These are areas of imbalances or gaps back to the downside. So it pulls back to the lower time frame supply zone. We'll look to fill gaps coming lower. So once it taps the zone, look to your left to see what needs to be filled coming back lower and aim for that area. As you can see, if you got in here at 22,830, taking it back down to these gaps that need to be filled coming to the downside, you could have taken out at 8:15 and picked up 15 points very easily there, or even continue to trail behind price, taking motion positions off, and each time it makes a lower high, then move your stop from what would be right here to right here, okay? And then it continues pushing lower. So that's setup number one, or using strategy number one that I'm sharing with you today. So again, you can wait for the market to pull back to a key area of supply or demand, aggressive selling, supply, and then look for the market to create a nice demand zone. It doesn't have to have a breaker structure, and then look to go short. Now, setup number three, or strategy number three, is all surrounding a liquidity sweep. Okay, so in this case here, you can see the market was pushing higher to the upside, breaking structure. If you notice below here, this is a nice area where the market could break structure below these lows right here and break below it, and then we have a structure break lower. Now, it already broke this area of structure, so we are actually bearish to the downside, making a low, lower high, and coming down. We slightly, with a sweep, the wick of this candle kind of swipe below that area. But if you notice prior to, once it swiped below, coming to the downside right here, what did it do? What was its intentions? What did it really do? If you look here, it made a high, higher low, and then it continued pushing to the upside. Then it came back. It made basically an equal low right here, okay? If you see this, And now we have an equal low, and then the market pushed up. Now, when it comes back down, what does it do right here? We have equal lows, or double bottoms, if you want to call it that. Equal lows, right? Equal lows are going to be a sign of where liquidity is resting in the market, or equal highs. In this case here, as the market is making this bearish descent to the downside, it sweeps below these two lows, those equal lows there. That's a liquidity sweep. What you can do at that point is look for an opportunity. And again, this is on the higher time frame. This all happened when the market swept below these equal lows on our higher base chart. Once it does that, then you can move down to your lower time frame chart. Okay, I'm going to show you the area. Let me do this right quick. This line right here, put it right there. All right, so here it is right here. This area right here was where it came right here is where it swept below those lows on the the higher time frame chart. Then all you need to do is either wait for a breaker structure going to back to the upside, because if you notice here, it's swept liquidity, right? But we're bearish on the overall time frame, but you can still take a trade going long or taking a bullish opportunity once the market sweeps liquidity, because what happens is that when they sweep an area of liquidity, especially to the downside, most likely if they did not break, say, below this low, but they had equal lows right there, then they'll sweep that area and they'll start continue pushing to the upside. All right, and that's what they did here. So it came down, swept the lows, and then once I'll see a bullish either breaker structure or demand setup on my lower time frame chart, then I'll actually go long, right? So here is an opportunity, like right here. The market may pushed up, pull back, create an area of demand right here, aggressive buying. Could have went long here, or you can wait for a breaker structure as well, to where the market pushed up, broke structure above this area here, okay? And so basically what it did was it made a higher low. It broke structure above these highs, broke structure above these highs right here, okay? And you could have looked for a pullback to actually go long right here, but as you can see, there's not a valid demand zone. That's a high probability zone. So you can wait for the next opportunity. So then it pushes back higher, breaks above structure right here, above here, and here, pulls back, aggressive buying to the upside, go long right here. Pull back to a high probability demand zone where there's a gap or imbalance attached back at the zone. Again, it swipes an area of liquidity or some lows, okay? Then as it pushes higher, either look for an area of demand to be created in a pullback to the area of demand, or wait for a structure to be broken to the upside and wait for a key pullback to an area of demand. Okay, so that's basically strategy 3 or setup number 3 that I want to talk about. Now, the cornerstone to how I actually trade and what I really express here on this channel, my bread and butter type setup, is where we have confluence with a zone within a zone approach. Okay, now does it always happen? No, but when it does happen, especially where you have a higher time frame zone and a lower time frame zone kind of butting heads or coming together basically in the same geographical location, that's the actual type of setup that I love to see, because I'm moving with the direction of the market. Now I go into more trades like this to the community of those who want to become either elite and ultra elite members. If you choose to become one, the link is down in the description portion of the video. What do you receive by becoming either an elite or an ultra elite member? It depends on which tier you go with, because each one you have certain perks and rewards. But with the elite, if you become an elite supporter, you receive my trade breakdowns. There are tons of videos after videos where I walk you through setups and trades that I've actually taken and posted over on the Discord. I break it down as simple and elementary as possible so you can grasp and understand those setups, talking about structure, profit target, stop loss, the full rundown. You also receive the market structure video for anyone struggling with that, as well as my video playlist. Okay, now if you would choose to become an ultra elite member, which is one tier or one step up, you receive all that I just discussed, plus my live recorded trading sessions, and you also receive the market recap videos. All right, so if you scroll down to the description portion of the video, click the link below the Discord link, you'll see 3 tiers pop up. So that link is titled Ultra Elite Supporter. Click on that. 3 tiers will pop up. Choose to either become elite or an ultra elite to receive the really valuable perks and rewards that can help you in your own trading. All right. So again, that link is down below. If you want to become a Discord member, come over and join us. The link is right down below just as well. It's the first link in the description, and it's free to join. Now, getting back to my last strategy, okay, the bread and butter setup. If you notice what took place here, we're breaking structure higher. So that means we're what? Making higher highs, higher lows. This was a break of structure where it pulled back, broke structure higher, had a nice area of demand right here, okay, once it broke above these highs. And this is a beautiful area of demand with a gap attached to it, or imbalance. If anyone that doesn't understand about the gap or imbalance, again, if you become an elite member, I talk about that. Or you can simply go to the home page and then kind of like use the magnifying glass, the search tool, type in imbalance or gaps, and you'll find some video content there. But anyways, it pulls back to the demand zone as it's retracing down. Okay, so we make a low, lower high. We're not reversing yet, okay? So we're still bullish to the upside. Taps into the demand zone on the higher time frame chart. So it all starts with marking up your higher time frame zones. Break a structure higher, demand, mark it up. Then as I move down to my lower time frame, let me find this setup right quick because it's to the left-hand side somewhere. Here it is right here, right below me, okay? So as you can see, as we're tracing back, that larger box is the higher time frame demand zone. The yellow one is, we'll have to classify zone within a zone approach. We're looking for a smaller time frame or lower time frame demand zone that's on the inside of the higher time frame zone. As the market comes back, you see it taps the higher time frame zone. But does it also tap into a demand zone off the lower time frame chart at this point? No. The 24 range? No. Again, I trade range-based charts, okay, guys? If you trade time, tick, volume, whatever you may trade, that's excellent. You know, you can do the same. But I trade range-based charts because to me they're just easier and cleaner to the eye to actually see the movement, and for me to be able to study and understand volume when in relation to momentum coming and going within the market. All right, so as the market comes here, nothing there. Pushes up. As it comes back down, it taps into a high probability demand zone right here. That is on the inside of the higher time frame demand zone. Zone within a zone. Think about it. Confluence is everything. So the more that I have of confluence, meaning one demand zone, two demand zone, or one supply zone, two supply zones within the same geographical area, I know that trade more likely is going to kick off and make a beautiful run to the upside. Look what it did here on the higher time frame. You can see blast to the upside, took out structure, broke above the highs right here. You can see it just as well on the lower time frame. This is it. Look how many points you could have picked up to the upside there. Look how much the market pushed up higher to the upside. These are the type of setups that I talk about, that I go over in the trade breakdown videos, in the live recorded trading sessions for anyone that chooses to become either an elite or an ultra elite supporter, which is that private community with loads of valuable educational video content that is, you know, for your entertainment purposes, that can help you in your own trading. Again, some people may, get it. Some people may not. I mean, because the thing about it is that, and I'm going to say this before I move any further. The strategy is very, very simple. I just went over 3 basic strategies right here that you can actually use. Pick and choose one, but the one that really is the cornerstone to how I trade the bread and butter is going to be that zone within a zone, the last one, which is strategy number 1 or setup number 1 that I showed you, okay? Those are the things that I talk about. If you become an elite member, I break those things down. I go into very much detail in and from an elementary standpoint, as simple as I can, covering, the trade breakdowns. Again, these are I'm not set up. These are trades that I've actually taken and posted over in the Discord community. I kind of got a little tongue twisted there. Sorry about that, guys. But I'm kind of, I guess, really say things as my mind is really, is processing it real quick. And I was trying to speak it out faster. But anyways, again, the trade breakdown videos are there for anyone that wants them just as well. There's trades that I posted over on Discord, and I break them down to the private community of the elite and ultra elite members. All right. So that's all I have to share with you today. Hopefully this video, you found some value in it. Please make sure, if you haven't already subscribed, and I'm sure you probably have, but if you haven't, click that subscribe button right now. Please come and join the community. You can join the Discord just as well. But drop me a like on the video if you found some value in today's video content. But make sure also to turn your post notifications on so you never miss one of the uploads. That's clicking that bell as soon as you click the subscribe button. Take care, and I'll see everyone in the next video.